After the previous video, I received numerous concerned messages regarding the significant drop in less than 2 weeks. First and foremost, although it appeared as a $40,000 drop, it translates to a 2% loss since I initially invested $1 million. While 2% may seem negligible, a $20,000 loss can be substantial. Hence, it's essential to start with small investments and acclimate yourself to market volatility. Investing $1,000 and experiencing a 2% loss amounts to only a $20 loss, which is less painful. I want to emphasize the security I achieved through diversifying my investments across multiple stocks. We have seen just a 2% gain out of a 16% surge in one stock, and it looked disappointing. But this diversification acted as a protective shield because my losses were less crucial. In cases where certain companies face substantial declines, my losses are limited thanks to the limited impact of each individual stock. Another crucial point to note is that most of my stocks declined because I concentrated my investments in two sectors, real estate and BDC. Sectors tend to move in similar directions. However, my course advice is to diversify your portfolio more extensively. Companies like Coca-Cola or McDonald's might perform differently because they belong to different sectors. By adding numerous companies from various sectors, each sector and company's influence become minor in the overall portfolio performance. Therefore, diversification and spreading your investments are crucial strategies. This example serves only to illustrate portfolio management and real-time learning, but if one of the two sectors will experience a crash, this portfolio could suffer a significant short-term loss. Some students also inquired about managing a portfolio with 60 stocks. How can they track them all? Similarly, how can you manage 60 apartments? You can focus on 10 to 20 stocks, which is akin to renovating an apartment. It increases income when you invest more in each. Alternatively, you can buy more companies, similar to acquiring more apartments, depending on your preferences. Start exploring and discover what suits your style. You don't have to make an immediate decision. You don't even have to monitor it as closely as I do here. You can simply reinvest the total dividends. This income is completely passive anyway, without your monitoring. As long as you conduct thorough research beforehand and have a good understanding of your investments, you should encounter fewer surprises along the way. The minimum is just to pay attention that the total income is not decreasing. You should reinvest the cash anyway, so you can also pay attention to the amount. After this lengthy introduction, let's delve into the details. I received dividends from all 10 stocks in August, resulting in a calculated annual yield of 7.3%. While this may not be substantial, keep in mind that some stocks increase their dividends over time, making the actual yield slightly higher. As you may recall from the last review, I invested in the stock with the highest dividend yield in my portfolio to boost my short-term portfolio yield. The month-to-date calculation reflects the change each month, while the small table on the right side includes inception to date, which tracks the portfolio value since I began investing, and year to date, which reflects the value from the start of the year. Until January 2024, these numbers will stay identical since I established this account in the current year. Now, let's examine the portfolio stocks and see how I reinvested the rental income to increase my monthly income. As usual, the first page displays the starting and ending month values. Scroll down slightly and you'll find the dividend table. This table allows me to easily detect any changes in dividends. A decrease is concerning and requires further investigation. Fortunately, there are no surprises here, and the monthly payments remain consistent. In the next month, you can expect growth in HRZN's dividend due to my increased investment in August. Based on the chart, I noticed another decline in HRZN, which makes its dividend yield even more attractive than my previous two purchases. It may be the optimal choice for investment. However, I also identified an opportunity in O, where the stock has declined, presenting a rare chance to secure high yield. Although O's yield is lower than HRZN's, it consistently increases its dividend every quarter. Additionally, the chart shows that whenever the stock reaches this price level, buyers step in, raising the price. By buying it at this price, I secure a higher yield in the long term and anticipate growth in my portfolio value as the price climbs in the future. Therefore, I chose O over HRZN, which also aligns with the principle of diversification. When I purchased the stock in July, the yield was 4.92%. Now, thanks to the price drop, I secured it at almost 1% higher yield. If you have any questions or suggestions, leave them in the Q&A section. I'll be back with another video soon.